Hello everyone. So today is 26th of May and so today was monthly expiry and so how did it go for all of you? You can comment down below and we will discuss where you went wrong. So coming to how we performed and how the Nifty and Bank Nifty derivatives indicators performed. So and how we found out in the morning at 9:25 a.m. that Nifty and Bank Nifty both are going to go down. Okay, so during that time, so today was also another tough decision because on both the sides again the same thing was happening. And moreover, like today, put build up was huge in the morning. Okay, so let me tell you what is being actually done. So if you look at the end of the day data of yesterday. So you'll find that the big players FIIs have done a huge call short, okay, and they haven't done any call long for their hedgings, but they should since they are doing huge call shorts, so they would obviously hedge, and for that purpose they have bought some futures, and some analysts went bullish because they have bought futures, but it was not the case. Futures was for hedging. And now coming to the shorts, not much short positions were made by the FIIs, and I gave a detailed analysis. I tweeted a detailed analysis of the EOD data yesterday. So yeah, so now since everyone knows that huge call shorts have been done, so naturally everyone would be bearish. But in the morning what they did was they themselves made the put shorts as well as the put buying. Okay, so they themselves did it. Okay, and then when huge OI was built up, the retail traders went bullish because they saw huge OI. They started selling puts, and then what was being done, the FIIs just stopped selling and they were just buying puts. Okay, and then at the same time they had huge call shorts yesterday, and in the morning they were also adding call shorts along with that. And then here if you see at, yes, first of all, when there was this thing, when Nifty opened at around here, so and we know that at 16,184 there is a resistance. Okay, and so that was very nice, like Nifty was at around 16,100, so that was a very nice opportunity to short 16,200, and that's what I told in the beginning. Okay, and then at 9, so that was at 9:17 a.m. When if you go and look at the price of 16,200 call side, it was around more than 20 rupees. Okay, and not even in 1 hour it went down to 5 rupees. Okay, and then let's come to 16,100. The call shorts were going on. We identified at 9:25 a.m. Okay, now some of you asked like how exactly every day I do this. So this is not one day or 2 day I went lucky. So every day how do I do this? So basically there are a lot of things you have to keep in mind. First of all, you are looking at the scores. Okay, Nifty derivatives indicators, you see the scores went negative. Okay, then also you do one thing, that is, suppose Nifty is around 16,100, then you have to note down the IV at not even 16,100, like plus 2 strike price above, like 16,000. If it's at 16,100, then you take 16,100 as well, 200, 300, and below also you take 16,000 and 15,900. So you take these strike prices both on the call side and on the put side, and you try to record. So you can build one, you can do some coding, even you can do it in Excel, or you can build some Python code or whatever, and you can do this and you note down the IV. Okay, and then take the average of these IVs And why I do that? Because that will help you to minimize the errors. Okay, so if you just look at one strike price, it won't be clear. Overall on put side and call side, what is happening at a range of 500, that would give you a clear idea. You note down the IV, and then if you see that on whichever side the IV is decreasing, then it's a very high chance that on that side the volatility is being absorbed. Okay, so I mean huge short positions are being done on that side. Okay, and if on some other side, or if on any side IV is increasing rapidly, then you get to know that there is a whole lot of volatility there. And so why is that? Because the the buying is going on. Okay, because huge lot of money is coming up, and then short positions are lesser than that. Okay, and so huge buying positions are being taken on that side, and since the big players are taking the buying positions, they are putting huge buying orders, and thus the IV or the volatility gets higher. Okay, so volatility basically, it denotes the movement of, or the percentage of the movement of the price. Okay, of that particular strike price. So if buying is going on in huge volume, so that means the price of that strike price is going to go up. Okay, and that basically in back calculation you can think that yes, so IV should also go up. Okay, so that's how I basically detect. So these are the two key points, but not like these are the only 2 points. There are a lot of other points, like I not only so first of all IV, and then as well with so first of all OI. Okay, the OI build up. Now I saw that the put side OI build up is higher than the OI build up on the call side today. Okay, but the IV helped me here to distinguish whichever side the short or the buying was going on. Okay, so it might happen that on both the sides shorting is going on. So several days I have also told that straddle is happening, short straddle. So on both the sides short can also go on, but yesterday, so every day you or the retail traders are being fooled by taking the buying positions in huge volume on the put side, and then shorting call with lesser than that volume on the call side, and everyone is thinking that the OI buildup is higher on the put side, and so everyone gets bullish and the market falls. It happened yesterday, it happened today, and the same thing happened also this week. On Monday or also on Tuesday. So here, that's why I told in the morning, as you can see, at 10:01 a.m. that don't get fooled by the OI build-up. Okay, so that's what. So that was a clear indication, and also we identified the call shots at 16,100. Yes, what are the key points for this? So OI build up, IV, and then I also look at the scores, and also I look at if there are some important levels to note or not. Okay, and after that I also check the premium decay, and I also check the money flow. Okay, so with all these, then I take the better judgment, and with and there is also a part called experience. So with all these I do my analysis. So again I am saying you, if you all these data points I am telling you, go and check every day that if you are being able to get the correct interpretation. Okay, so it's not like there is something called theorem and you follow this and this happens. So no, Okay, with all these data points you have to get the, now all these data point won't direct you to the same direction. You also have to keep that in mind. So with all these data points, whatever the majority is saying, whichever you want to give more importance to, so like I give more importance to IV and the OI build up obviously, and obviously the scores. So and then the secondary part is this premium decay and the intraday. But if premium decay and the money flow, they are both giving bullish signal but the others are giving bearish signal, I don't go for any trade. Okay, I wait for a particular signal, and that's how basically you get to like you get to know what is happening so early. Okay, not even 9:30, before 9:30. Yesterday we detected at 9:20 or 17, I don't remember actually, and today we detected the call shots at 9:25 am. Okay, and also for the Bank Nifty we detected at we detected that 35,000 there was call shot, and also 34,800, 34,700. Though in Bank Nifty huge, I mean compared to Nifty, even in Bank Nifty the decision was very tough because huge OI was built up on the put side. Okay, so now for the Bank Nifty it came down, but then again I even tweeted for this level. Okay, so and also one more thing, Nifty and Bank Nifty, until unless they are in the same direction, again I don't go for any trade. So yes, so here even if you see in the morning, that is the Bank Nifty scores were increasing. So two scores are not in the same direction, and then that was at 9:34, and from 9:39 onwards the two scores were in the same direction, and it was a good to go signal. And yes, here if you look at, I told that this level is very very important. Okay, so now you can very well see that this level 34,487 for Bank Nifty. So it tried to break most of the time. Then when it I mean when it recovered from this level, and then the actual move came. Okay, so let me show you both the Nifty derivatives indicator and the Bank Nifty. So yes, people were having problem with the previous graphs, because this is the Nifty graph and this is the score graph. So it's not very helpful to compare like scrolling down and up. So that's why I have made one graph where you can compare. So blue is the Nifty index and red is the score. So you can see that Nifty score from here it just came down, and then till here, so while it was coming down, and so Nifty also further came down and then again down, and coming down here as you can see. So this was, let's look at the time. So this is around 10:47. Okay, so let's consider it at even at 10:50. So 10:50 am, as you can see, the score started recovering. But look at Nifty, it was almost flat here. Okay, but the score were recovering. So there was a clear indication that it's going to go up, but we all expected that yes, it was since by 11 am there was a huge down move. That is, you can very well see that it came down. So till 11, here is the 11 am candle. So it came down to almost 15,920. So then after that the question was that for the whole day what would happen. Either it could go totally down, or again it will go down moving sideways, or it will go up and hit the stop loss. So these were the two viable options, and at that time if you see that we were just waiting for this level. So for Nifty to go down, it was important that further to have further go down and cross 900 and go to 800, 15,800. So it was important that Bank Nifty should have broken this level. but no, we were waiting and Bank Nifty did not break this level. Rather it went up. Okay, and from this candle it was very clear that no, the Bank Nifty won't be going down, and so okay, so then the move is upward and the stop loss would be hunted. So that was a clear indication, and here as you can see the score went up, and finally here Nifty was not showing any move, and then finally it shot up. Okay, and similarly for Bank Nifty, let's see. Here for Bank Nifty, as you can see, score came down, but even if you look at the graph, Bank Nifty did not come down much. So here the score, I mean, sharply recovered here, I mean very sharply recovered here, but here I mean you can see that the score was recovering, but Bank Nifty was not increasing. Okay, and finally then from here it started shooting up. Okay, and the score shot up here, and finally you can see there was some down move, and finally Nifty's graph went up. So this increase in both the scores during this period, and Nifty and Bank Nifty, though they were flat, so it was a clear indication that now it will go up. So we got to know beforehand, and that I even told that stop loss hunting would be done. Okay, but this, to be honest, this much stop loss hunting, or basically the move got real, and it so that was not expected. Okay, so we were waiting here, and then I know that stop loss hunting would be done, so we were just waiting for the stop loss hunting to get over, but we saw that it shot up, and then when it shot up, and I also told that now the put side positions are being the call side positions are being basically shifted to the put side positions. And moreover, the one more important thing was, after this candle, when this candle came, the day's high was broken. So when day's high is broken, you need to be a little bit careful. Okay, so it was broken, and then you can see that Bank Nifty went to the next level, and then it stopped. Okay, 35,170. Same for the Nifty, that it went up, and then I told that at 16,184 there would be a strong resistance, and so at the last hour we just shorted 16,200 again, and that too at around 4 or 5 rupees, and because that was a sheer short trade, because this level would be acting as resistance. So these levels I have already shown you several times. I haven't drawn them today. Okay, and even I think I also tweeted. So yes, this I tweeted that both of them have broken the day's high, and yes, 16,184 would act as resistance. So that was the whole analysis of today. Okay, and here if you it's very clear that Bank Nifty and Nifty, the scores were both increasing, but though the two indexes were flat, and finally they showed the up move. Okay, so yes, now next, if these levels are broken, then the next level is 16,459 for Nifty, and for Bank Nifty, let's see, let's look at 1 day chart. Okay, so then the next level would be 37,400. Okay, so still this level hasn't been broken, so let's see. And if this level 34,487 is broken, then the next would be 33,208. Okay, so be careful about that. And for Nifty, below, let's see where, so let's go to 1 day chart. Yes, so as you can see, this line is acting very nicely, 16,184. Still 1 day candle has not broken that. So then if Nifty goes between these two lines, so it has a very nice high chance that it will go and touch 15,647. Okay, so be careful about these levels. And whatever be the end of the data analysis, I'll be posting, or I'll be tweeting them. Okay, so it's not fruitful that I make a video on it, so I'll just give a detailed view on it. I'll just tweet them whenever the data is available. But I mean, you keep learning like how to analyze during the day and how I do these analysis correctly every day. So it's not yes, and one more thing, you also have to keep the end of the data as one of the views. Okay, so most of the times we have seen that end of the data go the opposite thing is happening. Okay, so you have to keep in mind everything, and with experience and with better judgment you can only go with the right direction. And yes, of course our scores helps us a lot. Nifty and Bank Nifty derivatives indicators, as you can see from the graph, it's very well clear. So these scores help us a lot in determining the direction beforehand, and that's how we are profitable over the days. And also one more thing, that is, as I always tell you, that stock market is unpredictable. Anything can happen. Like today's unexpected huge, like stop loss hunting would be done, but this huge, no one expected. Okay, so that's why I always tell you to hedge your position. So suppose if you would have shorted 16,000, Nifty 16,000, okay, then if you would have bought 16,100, then for your hedging, then you see that, then your loss would be very much minimized. Okay, because when Nifty shot up, then your short position would get squared off, or you can square it off, and your 16,100 position would give you some profits, and so it might help you to lower your losses. Okay, and that said, also one more thing, like one more thing, like yesterday, as I said here, that is, I learned one thing from the FIIs. Let me share it with you. So let's see the EOD analysis. Okay, so if you see that the end of the day data analysis, the future positions, they have shorted, so they have bought some future positions. Okay, the FIIs, now they have done huge call shots just before the expiry date, the monthly expiry date. Now they could have also bought calls. Okay, but there is this thing that suppose it might happen that, suppose they have shorted somewhere like 16,000. Okay, now it might happen that Nifty can go till 16,050, and they have bought some positions in suppose for hedging they have bought at 16,100. Okay, so what they did was very clever, that they bought the futures. Okay, so if Nifty goes up, so it won't be like so the futures would also go up, and it won't be like the options would like end at zero, worthless. Okay, so it's not like the options that would end worthless. So that's even if Nifty ends at 16,099, then also 16,100 call buyings would end worthless. Okay, and so all the positions would be in loss. So that's why I basically, so for us it's like easy, like whenever you see that this huge pump is going on, so then you just square it off and your short positions, and just wait for some further up move, and then you also square off the buying position. Okay, and you can thus minimize your loss. But they have huge positions. It's not like they want to close their buying positions or selling positions, they can then and then. So that's why, and it was very clever move that they, to hedge, they bought futures. Okay, because when yesterday Nifty was around 16,000, so then basically at the very last hour they did call shorts and the put buying, the futures buying. Okay, so they knew that if Nifty is going up, like it went up to almost 16,000, more than 150, then futures would also go up. Okay, so it won't happen like some options they bought for hedging would go worthless, and they would also be ending at a loss in their short positions. Okay, so that's why that was a very clever idea just before, because that was just before the expiry date. Okay, so otherwise you would have seen that in normal days they also buy calls, and they hedge their positions, or the call shortings. Okay, so yes, that's all the analysis, all the ideas that I've used, and some knowledge I've gained from yesterday. I've shared everything with you. So keep learning, keep trading, and if you want to join our members, then you can do that by visiting my website, the link of which is also in the description below. So trade safely, keep learning, and keep watching. Thanks for watching. See you in the next one.